Medicare's annual election period begins October 15th. Welcome to the madness, and welcome to Decoding Retirement. Hi, I'm your host, Bob Powell, and today I'm joined by Rhian Horgan, who's the president and founder of Silvur. Rhian, welcome.
Thanks so much for having me, Bob.
So I said madness is about to begin. There's a lot for us to talk about today. I would like to start with this notion that many Medicare Advantage plans around the country offered by Aetna, CVS, Humana are exiting the markets that they're in for one reason or another. Costs are too high, federal government regulations are too steep, et cetera, et cetera. Tell us what folks need to know about this trend.
Look, I think that the trend is that healthcare has gotten really expensive for the carriers to actually manage. And they are saying, look, we can only be in certain markets, which means less choice for consumers. It's typically most impactful in rural areas. And so the folks that actually need access to healthcare, maybe have more kind of either coverage needs or cost challenges, are the ones that are more at risk. I actually noticed just recently that CMS has announced that you can no longer do a lot of telehealth visits from home, which is pretty wild. I mean, I actually thought that was kind of a...
That was the point.
That was where we were going,
Yeah.
and particularly for rural health, it was really important. So this is going to be a year that a lot of folks are going to have to reevaluate yet again which plan they want to be on. And I think that just causes a lot of consternation, because I think all of us know the doctors that we've been with for a while. We want to be able to stay with them, but we're also trying to juggle what might our future needs be, and are those doctors going to be in network?
Yeah. So folks have already received their annual notice of change, or their ANOC, their evidence of coverage, their EOC. Beginning October 1st, they could go on and start looking at, but beginning today, they can go to use Medicare's Plan Finder. What advice do you have for them about that?
Yeah, so this is not the year to rip up the annual notice of change and put it in the trash, right? This is the year that every single American over the age of 65 needs to be reading it, because there's some really big changes. And I would say that the kind of high-level thought is that the changes are positive, but the devil's in the details.
Right.
So the big change that's come through is, as a result of the Inflation Reduction Act, we're seeing a significant reduction in what's called the maximum out-of-pocket for prescription drugs. That's dropping from $8,000 a year to $2,000. Sounds like great news. The challenge is that maximum out-of-pocket is just for what are called covered drugs.
Right.
So if you have heart disease, there are probably 20 different drugs that could be prescribed by your doctor. Your plan only covers a couple of them. And now that the carriers are being told, well, the max out-of-pocket is going down, there's two things that are happening. Premiums are going up, and then the second thing is the drugs are switching. So it could be that your drug was covered last year, but it may not be covered this year.
Right. So your Part D premium, which covers the prescription drugs, it could be a standalone product, or it could be part of a Medicare Advantage program. You'll likely see premiums go up for that. You'll likely see the number of drugs covered in Tier 1 go down,
shrinking,
and the number of drugs in Tier 2 and Tier 3 go up.
Exactly.
Right. So you really need to pay attention to your plan finder. For folks who find that their Medicare Advantage plan has disappeared, what options do you think they have in terms of either staying with the same carrier or just looking farther afield? Yeah,
I mean, I think one thing I would say just also on the prescription drug side is, if you're acting as a caregiver, this is a year not only to be thinking about yourself, but also thinking about a family member, because oftentimes caregivers are taking care of just making sure that mom and dad are getting the prescription drugs that they need. And this is, again, the year that you just can't have it on kind of on auto enrollment. Look, with change comes opportunities to see what other plans are out there. And I think this is where each consumer has to really think about, well, what are their spend? Are they a high user of prescription drugs? Are they currently a low user of prescription drugs? The irony is that the low users of prescription drugs will actually probably see their costs go up. The high users, if they're staying on covered drugs, will probably see theirs go down. The donut hole also is also going away as part of this reform. But I think it's kind of having that moment in time assessment. But what's always challenged the American consumer is, it's not only what I need today, but it's what I need 5 years from now. And I don't know about you, but I don't know what I'm going to need 5 years from now.
Yeah, so I think about it this way. There are about, 30 million people of the 60 million on Medicare Advantage plans. Many of them went into these plans because it had a $0 premium. It had hearing aids, dental, vision, et cetera. Silver sneakers, who knows what else, right? But they didn't forecast that they did all this when they were healthy, and when they're unhealthy, they could be exposed to $8,000 per year in out-of-pocket costs for medical expenses.
Yeah, and I think it's
ongoing.
it's the cost, and it's also choice, right? And I think you're starting to see some evolution on the choice side for Medicare Advantage, that there is kind of more choice creeping into the market. But I think at a very high level, what you typically see is the Medicare supplement plans are going to look more like a PPO, right? You're going to have the choice of doctors, which when you have a severe medical issue is often what people are looking for. But you can't really just switch into it right when you have that medical issue. That's just not the way the program works.
Yeah. You mentioned that people should look at their drugs and whether they're covered or not. They should also look at their network to make sure that the doctors they want are in the network.
Yeah, the doctors are covered, are in the network. And then the other thing to be thinking about when you're really thinking about total costs is understanding any life changes you might have had. So you may be familiar with the IRMA surcharge, kind of the income surcharge, and things like receiving an inheritance, selling a home can flip you into IRMA. Again, it's probably in some ways one could say like a luxurious problem to have, but I think folks are shocked, particularly when they're selling homes and downsizing, that they may not feel like they are wealthy, but they are put into this premium surcharge for a couple year window.
Yeah, especially for folks who are doing Roth IRA conversions, they're susceptible to this.
Roth's also a really good example of what triggers it.
Right, and hopefully it's only a 1 year event that you're exposed to IRMA, but in some cases it's not.
I think it typically lasts for at least 2 years unless you can kind of fight the battle.
Yeah, you mentioned the Inflation Reduction Act with the $2,000 cap. One thing about that is that folks who have the ability can go into a 12-month payment program for those drugs that are in that, at least within that range. Is that correct?
Yeah, I would describe it as a buy now, pay later, right? We go to Walmart, we go to Target, we can buy now, pay later at kind of most of the kind of consumer experiences we have today, and that is what the government has set up. On one hand, this is a positive, which is it allows folks that have kind of an acute illness that, need a medicine for 3 months to spread the costs out over the course of the year. You're probably not going to use it if you're on like a monthly prescription, but something that you need for a short period of time you can spread out. The skeptic in me would say well, what does that say about the American healthcare system, right? The fact that we need to buy now, pay later for prescription drugs says that something is fundamentally broken.
Yeah. So another thing about the Medicare Advantage plans exiting the markets, I understand that if the plan leaves the market entirely, that you may have an opportunity to switch into a Medigap, original Medicare with a Medigap plan without underwriting, but the premiums may be a little bit steep.
Yeah. So I think that's where, again, just trying to take the bright side of the bright side of the change is that when your plan does exit, you kind of get to start from scratch again. But again, the older you are, the higher those premiums may be.
Yeah. So one of the things I often think about is with Social Security, it's a one and done decision. But with Medicare, this is sort of like the cruelest thing that we can do to older adults here in the United States is to make them look at their annual notice of change each and every year, look at the plan finder each and every year, and try to discern which plan is best for them at a time when their cognitive abilities may be declining and there's a reluctance for them to switch because they're set in the ways.
Well, in theory, the notice of change is written at a third grade reading level. And I say in theory because I think we all can remember the first time we logged on to the Medicare website or we logged on to Social Security, and we all know how confusing that experience was and the amount of acronyms and, those acronyms continue to change, right? It's like there's one set of acronyms when you started and they continue to evolve. So I think that's where, again, for caregivers, this is where just think about your mom and dad. Like you may or may not be enrolled yourself in Medicare, but this is like the year you have to really make sure that your family members are being taken care of because they may have kind of trained themselves to not worry about this and just kind of put everything on autopilot. And in particular, this year is the year like not to let things go on autopilot.
Yeah. So the hard copy of the Medicare and You 2025 book has arrived. I think it's about 131 onerous pages.
I know. I always say if you think student loans are complicated, wait till you get Medicare and You, right? 130 pages to describe like how to just enroll in healthcare coverage in retirement.
So I know your firm offers help to people through credit unions. There are other places that people can go. They can go to their senior center where they might be a SHIP or a SHINE advisor who can help them. The point being, though, with that, if you're going down that route, you better book an appointment sooner rather than later because those spots fill up.
Yeah, it's a very short window. I almost kind of equate it to tax season, which is 7 or 8 weeks. Short window in order for you to kind of get that time to review it. So you have a short window to do your assessment, but also the advisors have a limited amount of time that they can actually spend on the phone. And so kind of getting ahead of it's important.
Yeah. So oftentimes I get a question, Rhian, about who I can trust in this marketplace. And when you're going to an agent, oftentimes one of the things that we're told is that the commission that they earn on a Medicare Advantage plan is 3 times more than the commission that they earn on a Medigap, which creates perhaps a conflict of interest.
Look, yes, I definitely see that. I think one of the things I always encourage consumers to do is understand what carriers and what types of policies an agent actually provides, because as a consumer, lots of choice can be confusing, but you actually want your agent to do that for you. You want your agent to represent Medigap, Medicare Advantage, and also DSNAP policies. A lot of folks avoid DSNAPs, which is the dual eligibility Medicaid, Medicare. A lot of folks are like, that's just extra hassle. I'm not going to kind of focus in on that and leave a portion of the consumer base out. So I think that's kind of the most important thing there is like that they actually are representing as many carriers as possible. It could be like there's a whole set of national carriers, but there's also local carriers, right? And so someone who just reps one carrier is just selling you that one product. They may not necessarily be getting you like the right policy for you.
Yeah. So you mentioned this problem of Medicare Advantage plans leaving mostly in rural areas. Folks who live in the cities, New York City, San Francisco, they have a plethora of choices and insurers and carriers, do they not?
We do as residents of New York City, but I'd also say it's pretty expensive, right? You tend to see some of these big city markets, just the cost of providing health care ends up being pretty high. Interestingly, the Medicare plans tend to be higher, but the long-term care coverage, as far as getting in-home support, because you've got a bigger population, end up being a little bit less expensive than what long-term care coverage can be in rural areas.
All right. I know we haven't covered the entire landscape of Medicare, but I want to turn my attention to another topic that you're fond of, which is Social Security. At some point soon, the cost of living adjustment will be announced. It's predicted to be around 2.5%, and that will take the average monthly benefit from, say, $1,782 to $1,826 or so. Any thoughts about that?
Well, I think the first thing to think about is that the cost of living adjustment we've seen over the last, let's call it 25 years for Social Security is actually half of what the Medicare Part B premium increases have been. So we've got a problem here, which is, most Americans are depending on Social Security to fund their retirement income, but their expenses are going up faster than their actual retirement income. That said, the cost of living adjustment is probably one of the biggest benefits of Social Security, right? And I think we all felt that 3 years ago when we went through this like spike in inflation. And I think there were many folks that had pensions that didn't have inflation riders or had inflation riders that were capped at 2%. The fact that this is currently linked to CPI is a huge benefit for the retiree population.
So the other thing I know that you're fond of talking about is Social Security reform. The Tax Foundation, when we're recording this, just came out with a new report that suggested some changes that would at least address some of the deficit that the trust fund could experience in the next 10 years or so. One is changing to using the price index, increasing the retirement age, using chain CPI, and raising the payroll tax cap. Any quick thoughts about that?
Yeah, look, I think as you've mentioned, the Social Security Trust Fund will not be fully solvent in 10 years' time. I think that creates a lot of concern for folks that are either retired already and receiving benefits and those that will be electing. If the past predicts the future, I would not expect that folks that are already on Social Security to see their benefits change. Typically, what Social Security does is, frankly, a combination of what the Tax Foundation has suggested, which is increase taxes on higher income earners so that workers are putting more into the system, but also think about, well, when is full retirement age? I think just the mental challenge with this term full retirement age is that most of us don't want to be working at 67 or 68 or 69, whatever the number is. So we may end up with a full retirement age concept that is like completely disconnected from when people actually retire. But there needs to be compromise. I would say that whether you're a Democrat or Republican or you're independent, folks that are listening to this podcast today have most likely been paying taxes into the system for 20 or 30 or 40 years, right? We've all been good tax-paying citizens. We need to be able to get our money back out. And we shouldn't be living in fear that our retirement savings will not be there for us.
Rhian, I want to thank you for sharing your knowledge and wisdom with us today. It's greatly appreciated. Thank you.
Thank you for having me. I appreciate it.
We're going to take a short break, but first we're going to answer a reader question in a segment we call Ask Bob. The reader's question goes like this. Should high earners stop contributing to their traditional 401k and contribute instead to their Roth 401k if they have one, and consider other strategies to avoid higher taxes later? Well, tax expert Ed Slott advises high earners to rethink their contributions to pre-tax 401ks and IRAs. And the big reason is this: future tax implications. Under the 10-year rule for inherited IRAs, non-spouse beneficiaries must withdraw the funds within a decade, which could push them into a higher tax bracket. But there are ways to manage these taxes, like converting to a Roth IRA, using life insurance, or making charitable donations directly from your IRA. Welcome back to Decoding Retirement. I'm now joined by Kerry Hannon, a senior columnist at Yahoo Finance. Kerry, welcome.
Hey, Bob, great to be here.
Oh, it's so great to be with you, and it'll be great to have you talk about a topic near and dear to my heart, which is great jobs for the 50-plus crowd. Where to begin?
It works for me too. This is a great area because, 50 plus is a huge swath of people, correct? And more people are working longer working lives as well. But here's the thing, there are lots of great jobs out there for people over 50. But what you need to do is understand that almost any job can be done by somebody in this age category, but it's up to you to figure out. I always counsel people, think about what your mission is, what motivates you, where would you like to work at this stage in your life? You've got this great experience. A lot of employers value that experience. They value the soft skills that you have too, as well as things like your communication skills. These are really, really important, Bob. And the thing is, the industries that are hiring right now, of course, are ones we look to a lot: the healthcare industry, education. But for somebody who has a few decades of experience under their belt, a small association, small businesses, these are ones that really say, hey, or a startup, they're like, we really need you. We need your expertise. And again, if you have some of those hard skills in your back pocket, like accounting, right? Everyone's looking for somebody who can help with their bookkeeping. So you're on a good path there. So I think there's a lot of wiggle room. One thing I want to mention though, Bob, it's really important if people at this age are kind of, thinking about what it is I should move to next, you have to be willing to get out of your lane, okay? At this stage in your life, your career might not be as linear. You might not have that replicate that job you just had before if you're in the job market right now. And so don't get stuck in a moment like U2 sings about, I think you need to be willing to pivot. And a quick story, and then I'll get back to you, is I met this guy recently who was over 50. He lost his job in sales, trying to get back into finding a sales job, was facing ageism as he figures it was. I don't know. He loves to sail. That was his hobby. He's a fabulous sailor. He went down and started teaching sailing down in Longboat Key, Florida, just for the spring. Take some people out, teach them sailing. He's out with the CEO, teaching him how to sail. And he tells the guy, this isn't my real thing. I'm just in between looking for work. And he said, well, I have a company in New Jersey. I'm looking for a project manager. You'd be great. And this guy's like, heck no, I've never, ever been a project manager. I don't have any of the certifications. And he said, you know what? You just proved to me you can get from A to B and B to C in rough weather and this and that. He said, you would be fantastic. End of story. He got the job. And he's now been promoted twice. So look to your hobbies, look to the things you love, and you may find a new direction at this age that you didn't expect.
Yeah. You mentioned ageism a second ago. What are some of the challenges of aging in the workplace in addition to ageism? I have, just as a preface, I have a dear friend. He worked for a financial services company. He was an expert in digital marketing. The firm merged, and he's been unable to find a job over the past 8 months, in part because he's in his 60s and maybe overpriced in the marketplace, perhaps?
I mean, I hate to say that it's overpriced because, frankly, that's an old. It's sort of one of the myths of hiring an older worker is that they're going to want more money and that they're not going to be up to speed with the new technology or what have you, or they're not going to play nicely with the younger folks on the team. So I like to think that each person is an individual. There are a lot of companies who are going to look at him at that age and say, you know what, we aren't going to be able to match his salary demands. But that individual might be very willing to work for a bit less in order to have autonomy, to have flexibility. That's what we want at this stage in our working careers. If we can have that little bit of feeling like we're in control of our time, often you will take a little salary cut to have that, or more vacation time, that sort of thing. But I do think ageism is alive and well, and I have seen some change. Truthfully, I've talked to a lot of employers who really are trying to get beyond that. It's deeply embedded in our culture, in the workplace culture. So you have to really be proactive. If you're 60 plus, 50 plus looking for a job, you need to make sure that you're up to date. Your skills are sharp, and you do play nicely with the younger workers.
Right. Joe Coughlin is fond of saying you need to become a lifelong learner, and I think that is true for anyone who's in their 60s or so and wanting to stay gainfully employed. Kerry, I want to turn my attention. We could talk a lot about this. We could talk about phased retirement and et cetera, et cetera. But I want to turn my attention to a conference that you just came back from called Future Proof. And you had a chance to moderate a panel about healthcare costs in retirement. What actionable advice do you have for us from that experience?
Yeah, Bob, the thing is, this is huge. Like your biggest expense in retirement may very well be your health care. And even with Medicare, Fidelity came out with a number this year that said that somebody who retired this year at age 65 could expect to have out-of-pocket medical expenses on average of $165,000. Now that's a big chunk of change, and that's just an on-average number. If you have a health shock, it can be completely a much higher number. So the panel I was on, and first I must say, Future Proof was rocking. This was the jamming place to be. There was 4,200 people there, mostly financial advisors, but all kinds of smarties in the financial world, and it was really super fun. But my panel was, we talked a lot about, we had a financial advisor who works with older clients, and we had someone who was a medical doctor who had recently started a company, or not that recently, but a few years ago, a strategy health advisory that he partners up his firm with financial advisors, and they work together to help people navigate the pathways and how to really be a responsible person when it comes to making these decisions about your medical care and how it impacts your financial health. And so it's a great partnership to be able to say, hey, that assisted care place might not be the right one for you. There are others that may be more affordable, that lots of different directions, or even which professional, which specialist you go to. You don't necessarily know cost perspective, which is going to be the best one for you. So I think it's really important that your financial advisor works with you to manage these healthcare costs, because they can be really something that's quite shocking to people in retirement.
Kerry, I want to thank you for sharing your knowledge and wisdom with us, and it's greatly appreciated. And I want to encourage everyone who's listening to make sure that they read your columns on yahoofinance.com. It's a plethora of great information, especially if they want to find a great job when they're 50 and older. So thank you again. And now it's time for us to answer a reader question in a segment that we call Ask Bob. And the reader's question goes like this. Do I have to enroll in Medicare's Part A when I turn 65 and I'm enrolled in a large group health plan? And the answer is this. You're not required to enroll in Medicare Part A when you turn 65 if you're covered by a large group health plan through your or your spouse's current employment. However, you have several options. You can choose to enroll in Part A at age 65 while keeping your employer coverage, or you can delay enrolling in Part A without penalty until you or your spouse stop working or lose your employer coverage, whichever comes first. If you've got questions about money or retirement, I'm here to help. Send them to askbob@yahoofinance.com, and I'll answer them in future episodes. So that's it for this week's episode of Decoding Retirement. We hope we provided you with some information to help you plan for or live in retirement better. And don't forget, for the latest retirement news and expert analysis, visit yahoofinance.com.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.